Hello and welcome to the Devil Dog Day Trade community. My name is Michael and I want to thank you for joining us here as we work together to own our financial goals and achieve them in better ways for ourselves. Our main goal here is to demonstrate that anyone is capable of using trading to provide both a second income stream and a more robust retirement plan for themselves. We do not need to rely on the quote-unquote professionals to do this for us. This multi-part series is a baseline introduction to our overall process, terminology, and structure so that our daily trade setup sessions and the follow-on deeper dive education videos will resonate better with you. This is the foundation that we will keep building on together. Our overall agenda across the different sessions will be trading versus investing, why those are different and why we choose trading, the foundation that we're building this on with supply and demand, what markets that we trade, our trading term index, supply and demand zones and how to recognize them, our platform setup, and trading rules and why they are important. For this session, we're going to go into trading versus investing, our foundation of supply and demand, and the markets traded, with the remaining topics covered in future sessions. So trading versus investing. What is the difference and why do we trade versus invest? There are three main points that we take into consideration as we define these two terms. Risk versus reward, the time frames that we hold on to activities, and leverage. So first, risk versus reward. Investing is typically a less risky proposition because when you are purchasing things for investments, every market out there, every company out there, their goal is to move up, to get better, to grow. So this, by default, everything that we purchase will, generally speaking, is intended to grow. But it doesn't grow a lot. And so that reward is lower with the lower risk. The time frames that we hold on to these things from an investing perspective goes into years or even decades. That stock that you bought when you were 20 years old, you'll hold on to that until you're 65, 70, 75 years old. It will increase in value, but it will not increase in a significant enough value for us to use this as a second income. Time frames that we use for trading can be as low as a few seconds per trade, up to minutes, hours, and occasionally days into weeks. Leverage. When you purchase a stock as an investment, you are purchasing it in a 1-to-1 ratio. If the stock is $20, you spend $20 to own one stock, and you control one stock. For the markets that we typically trade, which are futures markets, options markets, and forex markets, those have different leverage ratios with them. As an example, while each individual futures contract is different, we typically use an overall average of about 20-to-1 leverage ratio. This means that for every dollar you spend purchasing a futures contract, you get to control $20 worth of value. That means your returns will be significantly higher than they would be if you're just buying an investment in the underlying overall security. Just a note that with that additional reward comes additional risk, but we have multiple ways to mitigate that risk to make this a very profitable activity for us. Our foundation, built on supply and demand. Why is that? Well, the main basic fundamental reason is that numbers don't lie. 1 + 1 = 2, period. So we want to rely wholly and entirely on numbers to tell us when to purchase and when to sell. Additionally, supply and demand is one of the only methods that gives you the ability to plan ahead, and we'll go into more detail on that when we dig into our supply and demand zones. Just a quick note from a historical perspective, the supply and demand concept can be found in writings as long ago as 2,000 years. First, that's just an interesting fact. But second, what that tells me is that this foundation is not built on a financial market. It was around long before them. So therefore we have much more confidence that it's going to work, and it cannot be manipulated because it was based on a financial market itself. There are two other main ways that people typically use as foundations for trading. I'll quickly go into what they are and why we don't use them here. The first is fundamental analysis. Primary reason we don't use it is it takes too long, and it requires you to be an expert in the company or entity that you're looking into, because it looks at things like balance sheets and PE ratios and debt to earnings ratios and supply chain management and products, etc. And we aren't interested in becoming experts in any of these areas. We want to use something that we can use no matter what our background in knowledge and experience is. Second one is technical analysis. This one does use numbers, so at least we know it's accurate. However, technical analysis by using indicators are always after the fact. You can't do something until you see price already go through that area and the indicator has told you what happened with it. So you can't plan with this approach, and we want something that we can plan with. The overall core concept for supply and demand is that it is in balance. However, we want to look for the areas where it is not balanced. We look for those areas of imbalance because that's where we want to purchase or sell at. This is where the experts perform at. And their activity, their own analysis, their expertise in those areas, when they make those big trades, that activity leaves a fingerprint. We are looking for that fingerprint. Going into what markets that we trade, again, this is just a quick review for what you'll see during our daily show. We'll have a much deeper dive into what all of the options are, what are the pros and cons of them, and the process that we use and that you could use as a template for how you make the decisions of what markets that you are going to trade. As you see on my screen here, the area to the very right of it is a list of entities and a list of numbers and letters. We'll go into exactly what we call those in just a bit when we go through our trading terms index. But this is the list that I use to select from when we're going through each of our individual areas during the show. And in the order that we typically do them with, we will start with our reference areas. Just a quick note, there is a link in the description that brings up this full list so you can follow along there. And you can get just a better tracking of where we're looking at and what areas that we're looking in. So our reference markets, we first of all start with the dollar index. Secondly, we look at the VIX, that's the $VIX.X. That is the Chicago Board of Exchange Volatility Index that tells you how fast the markets are moving. From there, we move into our foreign currency markets, Forex. And we look at two pairs there. We look at the euro US dollar pair and the US dollar Japanese yen pair. From there, we go into our futures markets and we look at crude oil. We look at EC is the euro futures. Gold, GC is gold. JY is the Japanese yen futures. NG, natural gas. NK is the Japanese Nikkei index. TY is our 10-year futures bonds, and US is our 30-year futures bonds. We also look at all of our index futures, ES, S&P 500. NQ is the NASDAQ. RTY is the Russell 2000. YM is the Dow Jones Industrial Average. We also look down here at crypto markets. We have 3 of them that we look at on our TradeStation platform: Bitcoin, Ethereum, and Litecoin. Occasionally, we'll look at some of the other ETF and indices here, and typically we will only really pay attention to GLD, which is the gold ETF, and TLT, which is the 20-year bond ETF. As we have time each day, and when anyone requests it, we'll look at individual stocks themselves, and you can see a list of stocks here that I typically follow, but they all operate the same way. So if anyone is interested in something in particular, when you ask for it, we can pull up those charts and just take a look at it together. And that is it for this particular session. Thank you guys very much for joining us. Look for the additional set of videos in this series to go through the remaining topics that we went over, and for any additional videos that we may use, that we may post to augment the information that is shown here and that shows up on our daily prep show. Thank you all for your support. Thank you for your participation, and have a happy and safe trading day.